Good afternoon, and thank you for joining us today. My name is David Talbot. I am Managing Director, Head of Research here at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on royalties today. We will hear from Empress Royalty Management, Alexandra Woodyer-Sharon. She's the President and CEO, and from David Rhodes, the Executive Chairman. Now, during today's webinar, they will provide an overview and outlook, and then we will take some questions. So you can type your questions into the chat box at any time, and we'll get to as many as we can. But before we kick things off, first we need to discuss the fine print. During this Empress Royalty webinar, forward-looking statements may be made. I would direct listeners to their forward-looking statements outlined on page 2 of the Empress corporate presentation, and that can be found on the company's website, empressroyalty.com. For Red Cloud Securities, I'd highlight this webinar is for informational purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on Empress. Now, before David and Alex step up, I'd like to say a couple words about royalty companies. There are different kinds of companies. They often serve a purpose as a means to alternate forms of financing. There's origination financing, there's the project generation model, there's third-party royalty buying. And these royalty companies are often unique, and they generate fundamental value. Management teams and overhead are typically small, and they're not spending an awful lot of money on exploration or development. So, most royalty companies target solely precious metals, and time is money. So really, they need to understand when the projects are moving forward and the risks associated with their development. So, we do believe that royalty companies tend to outperform most commodity-based benchmarks. Empress is a relatively new entrant into the royalty space. It's approaching 2 years old, but the royalty model is well established by companies such as Franco-Nevada, which I worked for about 6.5 years, Wheaton Precious Metals, and many others. So with that intro, I'd like to turn it over to Alexandra to kick things off.
Thank you so much, David. Empress Royalty. We offer a strategic approach to investing in gold and silver. We're listed on the TSXV under the symbol EMPR. As David mentioned, here are forward-looking statements. They're also available on our website. As we will be making forward-looking statements, I encourage you to have a detailed look at. So Empress Royalty, we create new royalties and or streams to get projects into production or to help expand production capacity. We currently have a portfolio of 17 investments exclusive to precious metals. We're focused on quality over quantity. We're currently generating revenue, forecasting about $29 million of revenue to the end of 2025. Management and board have over 250 years experience, completed over $6 billion in mining finance transactions, which provide us with a unique access to deal flow. And we currently have a strong portfolio with a robust pipeline. And David, perhaps David was one of the founding fathers of Empress. You can share your vision and the reason why we established and set up Empress Royalty.
Sure, thanks, Alex. So part of the kind of rationale behind Empress really kind of developed from the Endeavour Financial. So Endeavour Financial, which I'm the managing director of, we undertake large financings for junior and mid-tier development companies. And over the last 10 years, we've seen a huge growth. I think David Talbot mentioned it in the streaming companies, the Wheatons, the Francos. They've grown, and their ticket size for doing transactions is 100 million plus. And we saw a shortage of anybody doing small streams, so sub $25 million streams. And that's 5 years ago where the development and the thought process behind Empress grew. And we're glad to say, nearly 2 years now, we've been in this marketplace supporting with shareholders, Empress, and we're now developing what is going to be the creation company for those sub $25 million royalties and streams.
Thank you, David. Moving into what are royalties and streams. A royalty is where we invest in a company and we receive a percentage of revenue from production. A stream, we invest in a company, we're able to buy silver or gold at a discounted price. At Empress, we do a combination of both. All the financings we provide mining companies are bespoke, so it depends on the jurisdiction and the other requirements on the company, whether it's a stream, a royalty, or a combination. The investment benefits for a shareholder. It gives you leverage to gold and silver price. It gives you access to a globally diversified portfolio of assets, and I'll get into our portfolio in a few minutes and where we're working. Limited exposure to capital and operating costs compared to typical mining companies, and it's scalable growth with low overhead. For a mining company partner, it's a non-dilutive, highly competitive cost of capital, providing that upfront capital by immediately monetizing part of its future production, and it's much more flexible structure and less restrictive than bank financing. As David mentioned, there's different types of royalty companies. There's the exploration generation, early stage, typically inexpensive to acquire, but there's the exploration risk. No guarantee it will turn into a mine. If it does, there's a long lead time to revenue generation. Then there's the trading acquisitions, buying third-party royalties. It's a pretty simple acquisition, but it's become a crowded part of a competitive bid process and a crowded marketplace. So you're paying a premium for these. And there's also no direct relationship with the mining company or the opportunity to negotiate these contracts. At Empress, we're in the third category. We're in the creation and origination. We work with companies to create a royalty or stream, and we have that direct relationship with the company. We have monthly reporting, weekly calls. We're very hands-on with our investment and able to de-risk it as a result. We're also create flexible structure that fits the goals of all parties, and we're really able to pinpoint our investment dollars on producing assets, which bring revenue into Empress. Royalty company growth. The first chart, we're looking at the royalties companies outperforming gold and the gold miners ETF over the last 10 years. And in the second chart, we're looking at the life cycle of a royalty company. At Empress, we're sort of in that stage one, establishing market presence and proving out our business strategy. And we believe with our plans for growth and with our management team and access to deal flow, we should be able to quickly accelerate to that stage 2, rapid growth. Which brings me to to David, to Endeavour Financial. I'm ex-PwC. I joined Endeavour Financial as an analyst, became director of structured finance, and worked with David and the team for many years in London. And over to you, David.
Yeah, so as mentioned, Endeavour Financial, one of the leading mining finance houses, arranging financings for companies, and this is where not only founding fathers of this company, but also we're in the business. So as you can see, we've done a lot of financings over our 30-year life and continue to be in the marketplace, structuring, negotiating deals, and that's where we can provide the smaller transactions to Empress. Additionally to providing all that marketing and all that pipeline towards the company, we also use our team to look to structure and negotiate transactions. Part of our DNA, and it's part of anybody who works with Endeavour and for Endeavour, is really financial structuring, maximizing the value, in the return, in this case for the interest in the shareholders and the returns, for the company. So part of that is cash flow modeling, financial analysis of the investments, looking at the due diligence from the technical and financials, and putting a full package together, which then the investment committee and the board of Empress can look at and obviously approve or not, as the case may be, to go forward and make the investment. So we put all our manpower and all our brain power together to make sure we can maximize through good structuring techniques, negotiation with the companies, and get the best result for Empress.
Thank you. Moving to our investment focus and criteria, we look at it from 6 different directions. We're looking at development and production stage projects. When it comes to company size, we're looking at small to mid-tier size companies, both public and private. We're seeing a lot of opportunities in the private sector at the moment. With commodity, we're a pure precious metals royalty company. We're looking purely at bringing revenue in from gold and silver. And we're global. We're in Peru, Mexico, and Mozambique at the moment, and continue to pursue opportunities in South America and Africa. Our investment size mandated is $500,000 to $25 million. The sweet spot for us and our evolution of growth is about $2 to $10 million US. And all of our investments have a strong ESG focus. Looking at our portfolio, we actually now have 3 producers, 1 development, and 13 exploration assets. So the first one I want to talk about was our first producer. This is the Cerro Antipite gold stream in Peru. The mine was started by Buenaventura in 2002, purchased by the Sierra Sun Group, a private group, in 2016. Over 1 million ounces have been produced to date. We invested $10 million to help them expand their production from 750 tons to getting up to capacity of 1,000 tons per day. This is a 4.5% gold stream up to 11,000 ounces. And then we get a 1% life of mine stream on this, and we're buying at 20% spot price. The annual cash flow is about $2 million US when they're fully ramped up. The NAV in this is about 15 million. This was our first producing asset we invested in last September, and we've received to date over $1 million US in gold. The next one to talk about that's just gotten into production is the Talahueto silver stream. And David, do you want to chat about this one?
Yeah, so this was an opportunity about a year ago now, where the mine was half built. The company needed financing. We looked at potential solutions, and in the end, we came up with raising some equity for the company, additional lending, additional loan, and on top of that, a stream. And Empress obviously provided the stream, and it's a $5 million stream, 100% of the silver from the mine up to 1.25 million ounces, and then it reduces down to 20% for 10 years. So this is, as you can see, a substantial cash flow producer for the company, around 2.9 million a year, and that's a strong IRR, well over 50%. And that really reflects, and we talk about the structuring nature and the DNA of the team, reflects how we can structure these streams with other, equity and other loans to get a solution which provides the company with something it needs, obviously the cash, and obviously provides the shareholders of Empress with a good return.
Thank you. We then have the Manica gold royalty in Mozambique, owned by a private group called MMP. They've just done the first couple gold pours, and we're receiving revenue from this shortly. They're going to be ramping up their production to be full scale by the end of this year. We invested $3 million. It gives us a 3.375% royalty up to just under 100,000 ounces. And then there's just over 1% royalty for life of mine. There's currently a 3-year mine life plan, but there's additional upside from 3 satellite deposits. So we expect this one to run a lot longer. It will bring in about $1.5 million US NAV, and this is just under 6 million US, and the IRR 30%. And this is another one that Endeavour brought to us through their network in Africa.
Yeah, and I suppose it's a good example of the global reach we've got and the global reach we have at the company. So Mozambique probably is on a lot of people's pipeline lists, but we've known the company behind MMP for a long time. They've got a lot of experience in Africa. Mozambique we've followed and been involved with for quite a few years now, and we've seen a big change in the country. The largest LNG find in Africa is in the north of the country. Over $15 billion of world money, and this is government-backed financing through the oil and gas companies that are going to Mozambique. So a huge change in the whole regulatory financial situation in the country. Additionally, this is obviously ideally located on the middle to west side of the country, right next to the Zimbabwe border, where you've got the Zimbabwe gold belt. So this is part of that belt. So a well-known trend in the gold belts in Africa. So something we're very happy to recommend to Empress, and as you can see, has good returns and provides with the potential a long mine life.
Thank you. We also have the Pinos royalty owned by Candelaria in Zacatecas, Mexico. For $1.5 million investment, we have a 1% royalty across the entire project. This project's currently being drilled, and construction decisions should be made within the next year. This will be exciting to see what happens with this project as it moves forward. We also have 13 early-stage Canadian gold exploration royalties. These we acquired as part of our direct listing on the TSXV in December, and they're great to have in the portfolio, but we're much more focused on revenue. So this brings us to our forecasted revenue. We are forecasting just over $2 million to the end of this year, $8 million in 2023, and then building that up to about $29 million to the end of 2025 US. We have invested $19.5 million US into the portfolio to date. Our net asset value is $46 million, and our market cap right now is just over $20 million. We are trading on a significant discount on all key metrics compared to our peer group and even the sector as a whole. Moving into people behind Empress. Obviously, you have David and myself on the call right now. We also have Jeremy Bond, who's on the investment committee with the two of us. He's from Terra Capital, also a large shareholder, as is Endeavour. Natasha Kiernan is a mining finance lawyer. Paul Mainwaring, a CFA from London. Wes Roberts, a mining engineer from Toronto. Management, we have myself. We've got Rich in New York, who's our global VP for origination. We've got Janet Menkel-John, who's our CFO. Caitlin, our VP, marketing and investor communications. We have Alison Rippon-Armstrong as our ESG advisor, and David Lang as our technical advisor. Our capital structure, roughly right now, we have 100 million shares outstanding. We have just over $750,000 Canadian in cash. Our debt is $4.8 million US. We actually have a $15 million debt facility, accordion style facility with Nabari, and we've drawn down 5 of that, and we have the $10 million available to us to continue to grow the portfolio. We have research coverage by Red Cloud, David, who's on with us now, and then research capital with Adam. Our share structure, we have roughly a third or 40% is controlled by management board and our strategic partners, a third institutional investors, and a third in the retail market. Near-term catalysts. We have a lot happening in Empress in the next 6 months. Sierra Antipiti will be increasing their production capacity up to 1,000 tons per day. Talahueto should be by the end of this year getting their ball mill up to the first ball mill in place up to 500 tons per day, and then expanding further in next year. Manica should be at full commercial production by the end of this year, forecasting $5 million in revenue annualized over the next 12 months. And that's if we did nothing else. But we're continuing to expand the portfolio with a strong pipeline of opportunities that we're looking at, and we'll choose the right opportunities to move forward and bring into the portfolio. To summarize, currently 17 investments. We've invested $19.5 million into 4 key assets. We're generating significant revenue to the end of 2025, forecasting $29 million. Our net asset value is $46 million, and our market cap is just over $20 million today.
I think, Alex, probably just for the audience to kind of set the scene, we're very much focused upon value-adding transactions for the company, and obviously to create value for their shareholders. So 17 of the portfolio, most of it, majority as you've seen is just greenfield kind of exploration. The real key for us when we set up this company was driving to get cash flow into the business. So the key assets which we've gone through from the Sierra Antipiti all the way to Manica, they're the key ones that we went into, development assets with less than a year to production. So Sierra Antipiti was in production, the other one. So we really are focused on the pipeline here is that revenue line. So most of our assets that we're looking at the pipeline, most of the assets we're putting forward to the investment committee are they're very close to production or producing assets. We are focused upon cash flow and good returns for shareholders. That's our key focus going forward.
Absolutely. And the fact that we're able to source our own deals through our network, that's how we're able to get some great returns, and we're not part of a competitive bid process. And the ones that are in the pipeline at the moment rarely do reflect Sierra, Manica, Talahueto. Similar investments to that is what we're looking to pursue and what we have opportunity to pursue. Thank you, everyone, for listening.
Okay, thank you very much, Alexandra. David, great presentation as always. So we're going to kick off our Q&A session at this point. So a reminder to everybody on the line, you can type your questions into the chat box at any time, and we'll get to as many as we can. So guys, Empress has a preference to work hand in hand with your partners, project operators, to create streams and royalties rather than buying existing royalties from third parties. So, I think this is interesting because it seems to me that most other entrants are out there buying existing royalties. So could you maybe just explain some of the benefits of the strategy?
Yeah, I mean, having that direct relationship with the company from the very beginning means that we're doing really detailed due diligence. We're doing the desktop reviews, we're in their data room, we're going through the models, we understand their future plans, we're sitting down with the management team, the finance team, understanding how they've structured themselves, the tax structuring. So we're really hands-on, which allows us to structure the right deal that not only gives us the returns that we want for our shareholders, but also it has to work for them. They have to be successful for us to be successful. And as they go forward with their plans, we are having weekly calls with them, monthly reporting. So we know what's happening with our investments. We're able to be there and part of the decision or help them with the decision making as they grow. And I really feel that de-risks it. We're also big shareholders in Empress. So, our goal is to de-risk these investments.
Mm-hmm. And do your investments constitute a real interest in the land or solely a contractual obligation between the parties? How does that work?
Yes, so we have the contractual obligation to say, for example, you take this stream in Peru. So we have the obligation that we're buying their gold from them. But with that case, we've got full security registered in country over all their assets, their plant and their concessions.
Yeah, I think
it's different, but that's a good example. Sorry, David.
Yeah, I actually think it's a good differentiating point to make in how we structure our streams and royalties. Because we're negotiating, we're able to negotiate it. So that's where we've got, not only do we have a contractual obligation for them to deliver and obviously pay us a royalty, we also have a full safe. Just in case anything happens. And that's part of being able to, if you negotiate with a company and you're able to negotiate this structure, and that's really back to our DNA of being structuring people. So we will have these, same with Serendipity, we've got security there, and obviously Taraweta, we have security as well. So we have some security in case anything does happen to the mines. We've done our due diligence, technical, financial, don't expect it to, but just part of our nature is being more conservative. And also, Alex, a fair point you're saying, we do take a lot of time and effort to monitor and make sure we're following our investments. So we've all been to Mozambique, we've seen the plant being built. Obviously, we get weekly reports on the gold pours, just to take Mozambique, for example, same in Peru, same in Mexico. So we are very much hands-on. It's investments we've made, it's money from our shareholders, it's been invested. We've made sure we get the knowledge, information to be able to manage that and make sure we get our returns from investors. So we're very much hands-on. That does take up a lot of time, negotiating, getting deals done, but it's also worth it because we get the returns to compensate for that.
Okay, great. Thank you for that. So now with your preference to create royalties, during that process, is there ever a bidding process between yourself and other royalty companies or any competition between you and, let's say, other means of financing?
We have not yet been in a competitive bid process for any of the royalty streams we create. Again, these are coming through direct relationships we have through Endeavour, Terra Management and Board. So we've not been in that situation. But there are things like, as David was talking about earlier with Taraweta, where there's some equity, there's some debt, and there was a gap, and we provided that final piece of the puzzle. So each situation is quite different. But now don't get me wrong, we still get the calls from the investment bankers every month with different packages that are being, paid.
Equity markets. Usually every CEO of a gold company thinks their share price is undervalued. So they want to raise equity. We're the perfect mix. We're not debt. We're not equity, we fit in between. We're perfect part of the capital structure, fitting in between a long-term payback. You don't need to pay us back in 1 year, 3 years, 5 years like a loan. There's no covenants. It's not like type of transaction. Although we do have the added comfort of having some security on the assets, so we're a little bit more of a senior creditor than equity in that sense. So improved creditor position, not opening and shut like the equity market. So, looking at the markets over the last couple of weeks, it's put ourselves, because the equity markets aren't available, in a stronger position to negotiate terms, and our pipeline as a result is looking nice.
Mm-hmm. And those pitches that are made to you, what stage of company are they typically? And do you seek out really existing cash flow, or are you willing to take a little bit more risk and enter at earlier stage?
For our evolution of growth right now for Empress, we really are focused on ones that are in production or within 6 months of production. As we grow, down the road in a couple of years, we might look a little bit earlier stage than that, but everything's, 6 to 12 months production for sure, already in producers. And that's, again, to really focus on bringing Empress revenue into Empress and allowing us to grow and then have more investment dollars that we can put back into the portfolio.
And as you stick closely to precious metals, as you said earlier, how do you approach diversification of your assets? Have you ever considered base or battery metals?
We have seen quite a few in other metals, but really want to stay true to being a precious metals and only having our revenue come from gold and silver. I think that's very important to us, especially as seeing what's going to happen with the gold and silver price down the road in the future. I think that's going to be a huge benefit for us. In terms of diversification, we're looking in different countries. We're in Peru, we're in Mexico, Mozambique. We truly are looking global, different investment sizes, and a balance, again, between gold and silver investments.
Right. Okay. Now, you mentioned you have 17 royalty investments right now, and you're in the sweet spot of having some of those just ramp up as we speak. So maybe just remind us how many of these are likely to be paying in the next year or two.
3 of them will be paying. We've already received revenue from the one in Peru, $1 million to date. We've received the first silver credits from the one in Mexico, the Talahuela project, and we're just about to receive the first revenue in from the one in Mozambique. So those 3, we're receiving revenue. All of them are in ramp-up period or getting up to full commercial production. So we'll really start to see the revenue in Empress build over the next 12 months. We're forecasting about $5 million in revenue. And again, that's if we did nothing else. But we've got a lot of exciting opportunities we're looking at in the portfolio and the pipeline right now.
Right. And do you treat these as essential financial entities? Do you take the cash from the companies or do you take physical gold, silver?
The one in Peru, we are taking gold credits from Switzerland right now into our BMO account. With Talahuela, we're taking silver credits and get into our metal account. And then we received the one in Mozambique's a royalty, so we receive cash for that one.
Okay. And, Tahuedo, this is your largest investment. You expect considerable returns from this asset, and it just has started paying. How important is this asset specifically to your project portfolio right now?
Very important. I mean, it's what's going to bring the silver into the portfolio, which we love. And, that's why we have, when we did the investment, we have David is now the chairman of Altele, and we also put another director of ours, Natasha, on the board of Altele, making sure we're protecting the investment and that we're in there and able to really drive it forward. And I think it's just pushing it out by 6 months. And essentially how we've kind of modeled it now. So there has been the delays in the ramp up, which has obviously been frustrating for everyone. I think with the new CEO they brought in place, who's a mining engineer to really drive the company forward. We're excited about that. So yeah, we redid our forecasting to push everything out, but it's not taking away from our revenue or net asset value. It's just extending, unfortunately delaying it at the moment, but I think they're making the right changes over there to really drive the company forward again.
Yeah. Okay, great. Your current Manica mine plan, or I guess the company's mine plan, there's only 3 years, but your royalty lasts in perpetuity there, and there's additional upside from some satellite deposits. So what might that mean for Empress cash flow going forward?
We expect that one to run a lot longer. As I mentioned, we were just at site a couple months ago, and when you're there, you really do, the geologist on site is amazing, and he worked for a long time in Zimbabwe, and it really does represent what the Zimbabwean gold belt is coming across. So we went to the actual deposit itself and saw that, and we went to the satellite deposits where they're planning going next. I really feel it's got a long time. This should run a really long time.
Great. Okay. And last year you acquired a stream in Peru, the Sierra Antapite, which is owned by a private company, and it's already paying for you. So how did you come across that opportunity, and is there more due diligence required to complete when you're dealing with private companies?
Yeah, there's definitely more due diligence. You can't rely on obviously what's been filed on Cedar, so you really do need to get in there and kick it a lot harder. That was one that came through my network and the group I'd known for a long time. They are fantastic operators. They've been around for 30 years in Peru, mining contractors, engineers, building mines for other people, operating mines for other companies, and they decided that they wanted to do their own mine. So that's when they bought that in the future. But they're a great operator, and they've delivered consistently for us. We're consistently getting gold from them every week from Switzerland.
When you say working with them a little bit more, without spilling the beans, is that, expanding what you're doing right now, or perhaps looking at different assets that they have? Perhaps
yeah. We have a great relationship with them, so we're excited whenever they move forward. Potentially there might be some opportunities, with other projects. These are things that we're evaluating and look at as they make sense and as they meet the right criteria for us. Again, we want things that are within 6 to 12 months of production or already in production, really focusing on revenue for right now for Empress and its growth plan.
Okay. I guess you mentioned having an ESG focus as well for Empress. Now, does that mean there are specific attributes or criteria you look for an investment, or are there certain actions that Empress takes directly?
So we're right in the process of finalizing our ESG policy, which we'll be publishing on our website. We're working closely with our ESG committee at the board level, as well as with Alison Ripon Armstrong, who's our independent ESG advisor. So we'll be coming back to the market with a lot more information on that as it progresses. But we do have, even at the desktop review level, a checklist of important ESG items that are on a generalist level. And when we get into the projects and we're doing the independent third-party review, there's very specific to each project of what we look at. As we said, we've got this pipeline of opportunity we're looking at. We've rejected 4 deals in the last 6 months. One of them was based upon environmental concerns, or the environmental policy of that company didn't align with what our mandate is. So it is a very important part of our decision making.
Right. Okay, great. Thank you very much, Alexandra and David, for speaking to us today.